Good evening, guys. Today we're going to compare GameStop versus AMC. Check this out. So you currently have GameStop right here at $26 with an $11 billion market cap versus AMC going for $3 with a $1.2 billion market cap. Right at the bat, who has a better balance sheet? All right, so we have AMC's balance sheet right here. We're going to take a look at the annual data. Check it out. December 2024, the latest they reported, they have $632 million in cash. I'm kind of surprised because that is quite a little bit of cash, but check out how much debt they have. Long-term debt, they have about $4 billion in long-term debt. So $600 million in cash with $4 billion in long-term debt. They're going to have to keep paying the interest on that debt. And when you compare to GameStop, balance sheet, annual data, $4.7 billion in cash. And when you go down to the long-term debt, they have about $6 million in long-term debt. That's nothing. It's peanuts. Basically, they have no long-term debt. So guys, GameStop is the play. When you're comparing it to AMC, why would you invest in a company that has so much debt versus the amount of cash they are holding when you can buy a company with $4.7 billion in cash and almost no debt? GameStop is about to transform to something more. We're all going to have to just wait and see what happens. Besides the $4.7 billion in cash, remember guys, they did also issue $1.3 billion more of convertible senior notes, so they are going to get an additional $1.3 billion at 0% interest rates that are due in 2030. So you add the $1.3 billion they're about to raise to the $4.7 billion in cash that they already have sitting there in the bank doing nothing. In the next week or two, hopefully we will be getting an announcement on if they purchase Bitcoin or not. But so far, just looking at the balance sheet, GameStop is in a way better position than AMC. And another reason why GameStop is a better buy than AMC is because insiders have started purchasing shares of GameStop. So if you take a look at the insider trading happening on GameStop, you have Ryan Cohen, Cheng Lawrence, and Alan Natal. So you have two directors and also the CEO and president purchasing shares. Ryan Cohen just purchased 500,000 shares. He owns over 37 million. So it's always good to see insiders buying shares. That's a bullish signal for the stock itself. And take a look at AMC. Nothing but selling. Nothing but selling. And Terra Capital right here, which is a 10% owner of AMC, doing nothing but selling their shares. You have a director selling shares. And no insider buying for AMC. So this is a bad sign, guys. Be careful when you're investing in AMC. I know it's still labeled as a meme stock. GameStop is still labeled as a meme stock. But if you want to invest in one of these two meme stocks, GameStop is the safer bet. Not just because the balance sheet is strong, but you have insiders who are supporting you in the purchasing of shares. You also have a bunch of catalysts that could push GameStop and pretty much cause a squeeze. You have Roaring Kitty who hasn't tweeted, you have the Bitcoin announcement that hasn't been announced, and you have the possible chance of GameStop transforming into a holding company. There's a lot more things that are about to happen to GameStop versus AMC. I know it's still considered a meme stock to some people, but it is a little dangerous buying a company that has huge amounts of debt versus the amount of cash they are holding. So make sure you pick the right one, guys. Are you buying GameStop or are you buying AMC? Let me know in the comments. Thanks for watching this quick video. We'll see you in the next one.